Hi, I'm Patu from freefincal, and if you want to build wealth or become a successful investor, I think we should stop asking the right questions at the wrong time. Let me explain what that means. But first, yesterday I had asked viewers to give suggestions about future videos and so on. Many have said talk about stocks. Uh, well, that will take a lot of my time to do it. First of all, it's not my cup of tea. I don't do it personally. See, I am building a stock portfolio myself, and every month I'm increasing its weightage. But I use simple ideas like low volatility to invest in stocks. I don't want to do too much research on balance sheets, or I don't want to look at price movements too much. Therefore, I cannot, since that is my philosophy, I can only reflect that in my content, and I cannot add something new. It's not my cup of tea. There's a lot of people doing it, and I don't need it for my content or for my investments. That's the reason why I'm uh, not doing it. But if I have some, if I if I think I can offer something new, I will. So let's get back to this. So what do I mean by the right question at the wrong time? The most popular thing is uh, you look at how mutual fund AUM has grown. There are many graphs. You can see how the number of folios have grown. People start buying equity mutual funds well after the market has moved up. They actually see 1 or 2 years of very good returns on the market and then start buying. And then the year after they started investing, it will be minus 10%, minus 15%, and they will start cribbing, oh, it's bad, I made a bad decision, all this stock market is gambling and so on. So, should I invest in equity is a right question, but don't ask it at the wrong time by looking at um, uh, recent movement in the stock market, and that's a big problem. And on a similar note, should I sell my equity now? It's also a wrong question, because people ask that question when the market has fallen down. They should be asking that question when when the for the last year the return is 50% or 75%. Then they should be wondering, oh my god, I've got a lot of returns in the last few months. Should I protect my investment? Should I, even if I don't want to use the word book profits, at least can I do rebalancing, a simple rebalancing, pull some money out and push it into fixed income? People should be asking that question when they see the returns. They don't do that. They see the losses and then worry about, oh, should I pull out my money now? It doesn't. That's the problem. Again, take the case of gold. They see gold has moved up in the last few months. They say, oh, shall I buy gold? Is it a good way to start investing in gold? Shall I buy sovereign gold bonds? The government is issuing sovereign gold bonds practically every month now. So people are reacting to to events, to news. That's not, so they're asking. There's nothing wrong with the question, but they're asking it at the wrong time. You should start asking, when should I have gold? When you start investing, regardless of what the price of gold is. You should ask, should I invest in equity regardless of what the price of equity, the Sensex is or whatever it is. Should I book profit? Again, that should be regardless of market movements. Yeah, do it once a year, that's it. Rebalance once a year, that's it. That's simple. The Again, international funds, they look at the US markets moving up a lot more frequently than Indian markets and say, can I have some stock? Huh? It just doesn't work that way. The problem is, if it just shows, you look at the questions that you see in personal finance forums, look at the questions that you see in the comment section in my videos or any other videos, whatever it is. It just, the first thing that comes to mind is people don't have an investment strategy. If you have an investment strategy, you will not be asking, should I do this now? Should I do this? You will already know. You will not be reacting to news. I've said it last couple of few days ago as well. So we should stop asking questions at the wrong time. We should not think about investing in an asset class based on its past returns, whether it is good or bad, or pull out of an asset class because of its past. It doesn't work like that. We will never be able to accumulate any kind of wealth if we are going to do that. If you're going to pull out of equity at the first sight of negative returns, more often than not, most people will miss the next rally, because nobody knows when it will be. When is the next rally? People will say, oh, there's a recession, there's bad news. People have been saying this. I am tired of this. I mean, if you say it once a year, I will understand. Every month I'm hearing bad news. Even once a year is too often. But there's no value to it. See, when do equity markets crash? Or when does any asset go stumbling down? When people in the market stop believing altogether. Everybody, short-term investor, long-term investor, everybody believes together that this is not going to work for me. When they do it at the same time, the asset classes falls down. When they will do it, we can never predict. It just cannot. It's gonna happen, and we can never pull out safely by looking at news, looking at events. It's just not gonna work. The point I'm trying to make is, please don't look at something that is moving up or moving down and ask whether I should have some exposure or reduce my exposure to it. That is just, you know, fooling around. That's all. It's not investing. And unless you have a strategy, it doesn't work. Have a clear strategy and stick to it. But the problem is, I have a strategy. Is it the right one? Nobody can help you. That okay, then we can. Then people will say, go talk, seek a financial advisor. Then people will ask, which advisor should I ask? Is it the right one? Have I made the right decision in going to this guy? These questions are never going to end. You have to. That is the reason why I keep saying people should gauge or ask questions based on personal considerations. After all, it is personal finance. How much money do I need? Is it okay if I can? Is it okay for me to stay invested in the market, in the equity market today, when everybody says it's going to fall down, for my goal, which is 10 years away, 15 years away, or next 2 years away, 3 years away? That is the kind of very personalized questions you should be asking, and if you are, that you can ask at all times. And so please don't ask questions, the right questions at the wrong time, and make wrong investment decisions. Ask the right questions regardless of events, regardless of price movements. And should I have gold in my portfolio is a good question, but don't look at the recent price movement and ask it. Should I have international stocks? Again, good question. Don't look at what happened in the Indian market in the last few months and ask that. So the main point I want to say is, do not think about risk when you see it. Think about risk when you get reward. When you see the returns, worry about risk. If you do not remember about risk, life will remind it for you, and that will be terrible. So that's what I wanted to say in this video. I hope it makes some sense. I am repeating myself, but sometimes it helps me, maybe people who are watching it. I'll catch you again in another video. Thank you. Bye bye.